Did you know that research and development R&D credits are powerful tools for tech startups? Let's explore federal and state-level R&D credits, but first, follow us. Federal R&D tax credits are known as the research tax credit. They let you deduct qualified research expenses from taxable income. Qualified research expenses include employee salaries, research supplies, contract expenses, and more. Plus, startups with less than $5 million in gross receipts can get up to $250,000 per year against payroll tax liability. State-level R&D tax credits are specific for every state because some offer more generous credits. What should you consider though? First, documentation is important. Maintain records of project details, challenges, and outcomes. Check your eligibility. Research must be technological for a permitted purpose, involve uncertainty, and include experimentation. Consider carry forwards. Unused credits can be carried forward for future use, ideal for startups with low tax liabilities early on. Be sure to get your free consultation with us to learn how to elevate your tech startup to a whole new level.